I'm Daryl Jones, Director of Research at Hedgeye. I'm here with Joe McMonigle, our Senior Energy Policy Analyst. We are here to talk about OPEC, which is obviously very often in the news. They're once again in the news. What is this sort of newest idea that they've been talking about and is being bandied about in terms of potentially controlling production?
Yeah, so they just ended this meeting yesterday in Algiers, and they had hyped this concept of coming to an agreement on a production freeze.
Yep.
And essentially they were unable to do that because they couldn't get everybody to agree to that. So as I put in my note to clients, they basically had to go and break the glass in the emergency box and come up with something, because if they hadn't, they had such hyped expectations that there could be some price fallout, obviously, of another big failure. So instead what they proposed is something they kind of floated at the May meeting, which is essentially a production ceiling.
Yep.
They're referring to it as a production target. And what they've proposed is a production target about between 32.5 million barrels a day and 33.0 million barrels a day.
Yep.
The 32.5 number is significant because that's what they're saying their 2017 demand is. But that's a huge delta, right? I mean, that's the production of Libya on a good day,
Yep.
So there's a lot yet to be known about this plan and who's going to be producing at what level in order to meet that production target level.
What's the next sort of decision point for the plan? Obviously, nothing happened this meeting.
Right.
What is the next catalyst on the horizon?
So they have essentially punted this decision and all the hard work to the November 30th OPEC meeting, which, as you may recall from our notes in May, when we were at the May meeting, we basically said we thought that would be the first meeting in 2 years when OPEC would at least consider some kind of production change.
Yeah.
And so that looks to be playing out. We're not predicting they're going to do something, but really the last 3 or 4 meetings have been non-events, non-starters. They're just there to meet. There's no real consideration of doing anything. And so essentially what they did was they punted this work and this decision to that meeting, and it's not at all clear that they can even come to an agreement. And we think this is somewhat of a risky gambit on their part. I mean,
Yep.
What they might have, if I were advising them, I would have suggested that they should have just put out a statement saying they made a lot of progress, they'd laid the foundation for November. Instead, they're trying to sell this as an agreement, that's going to happen at this November 30th meeting. They're a long way off from doing that. I would have to say the odds have to favor they wouldn't be successful.
Yep.
And if they aren't, they've built these, supersized the expectations that there'll be some serious fallout in November.
People are now either pricing it in the market or expecting it to happen. In the scenario that it does happen, what does implementation look like? Or is every country involved, and then what's the timing of implementation?
Yeah, so basically what they said was they're going to form a committee
Okay.
to come up with basically
Sounds like Washington.
production levels, exactly.
Yeah.
Production levels, i.e. quotas for each country, which I just think that's an impossible task.
Yeah.
Here you go, country A, here's your number, without any kind of a discussion. The other aspect to this, which is in the actual statement that OPEC put out, is kind of silent on whether every country is going to participate. And I think this is one of the key reasons they were able to get an agreement, because we know from comments that various ministers have made to reporters that essentially Iran, Nigeria, and Libya are exempt, from any kind of deal. The Saudi minister actually said, something like they could maximize they'll be allowed to maximize their production in a way that makes sense. Now, I think in the way that makes sense is kind of his way of qualifying that, but in the other countries' views, we don't have any limits at all. So, Iran, depending on where you think they are on production, it could be anywhere from 150,000 barrels to another 400,000 barrels a day.
Yep.
If you throw in additional supply from Libya and Nigeria, that's probably another 800,000 barrels a day potentially. And so now you're talking like 1 million barrel a day leaky hole in this production ceiling.
And the production ceiling could already exceed demand if they go to the high end.
Absolutely. Right. That's the other big part here is we don't know what the baseline will be for the cut.
Right.
For example, in July, Saudi Arabia was producing 10.67 million barrels a day.
Yep.
The height of the summer season, they're using a lot of oil domestically. So for them to cut, if that's the number, they would normally cut in January to about 10.2 million barrels a day. So, there really wouldn't be any physical oil coming off the market in any real sense under that baseline. We just don't know what they're going to use.
So it sounds like there's a lot of unknowable kind of scenarios, and the idea of this even getting approved probably is maybe a bit of a stretch. But let's say it does pass. Is there a positive scenario for U.S. shale producers?
Well, yeah. I mean, I think already, to the extent the market thinks this is a deal and prices get a bump out of it, I think anything above $50 really starts to bring U.S. shale back.
Yep.
Certainly, prices in the low 40s I think made it very difficult for them. But if they see $50 and they see a ramp up because of OPEC action,
they'll start to invest.
Yeah, I think they will come back. I mean, as we pointed out, I think about a week ago, the U.S. production has declined about 1 million barrels a day from its top level in April of 2015 to today. But the problem, after nuclear sanctions, Iran has just replaced all of that.
Right.
So instead of the market coming into balance because U.S. production has come down because of this low price environment, we're back to where we were in November of 2014. If OPEC starts cutting 750,000 barrels, which they're banding about as their number, and U.S. shale comes back, U.S. shale will just replace what the OPEC cut is. And so it's hard to see. We're trying to I think we're getting into a little cyclical, problem here. And I think the biggest problem I think for the producers has been since February of last year, all they've done is talk up prices through, basically 3 freeze attempts. And so prices have been high enough that U.S. producers have been able to hedge. They've been able to stay alive because of this, instead of having prices be low for the entire year, which I think was really the original Saudi plan. I think they maybe would be in a better position at the end of the year to make some change in policy, because they would have really taken off a lot more U.S. shale. There would have been sharper declines in U.S. production, and conceivably a lot more CapEx cuts and project delays as a result.
Right. Okay. So I guess just to summarize, the next date to watch is November 30th, the next meeting. It sounds like your view or our view is that it's going to be tough for them to come to an agreement that probably makes sense. And even if they do come to an agreement, it's not clear that it's going to take a lot of supply off the market.
That's right. Not very optimistic.
So still kind of bearish on oil based on the kind of policy view.
Very good.
Thanks a lot for tuning in, everybody. Joe and I had a really good discussion on OPEC, and we look forward to kind of keeping you up to speed as we head into the November 30th catalyst and the next OPEC meeting.